Today is the moment of truth for Bitcoin. Will the FOMC meeting trigger a violent collapse, or are we going to see a continuation upwards? Let's go ahead and get into it. Okay guys, welcome back to the channel. Now Bitcoin is taking on a bit of a resistance here. We're struggling to get back above 20,500 to that 20,800 trigger level, which is of course acting as a major blockade before the next move upwards. This is a delicate position for Bitcoin to be in going into the FOMC meeting, because if we get bad news, Bitcoin really will see an aggressive move downwards. We'll talk all about that one today, and of course we'll talk about what happens if the news is good and how you should react. Now, before we get into the video, go ahead and click that like button. It takes 2 seconds. It really helps with the video. It shows you like the content and it helps push the content to new viewers. Let's get into it. So we'll go ahead and talk about the charts and the analysis, and then we'll get into the FOMC later on. But let's go ahead and take a look at this. So 5.56%, obviously we closed out October green. We talked about that a little bit yesterday, how it was the smallest green monthly close we've actually ever seen for Bitcoin. In history of Bitcoin, this is the weakest green monthly close we've ever seen. And we said that is a combination between the fact that we are potentially at the bottom. We are hovering above that $19,000 horizontal support, which is a very strong support line. We've been above there for 5 months now. Taking into consideration, we do have massively reduced volatility. Obviously, we haven't seen low volatility like this before. We've seen it, 3 or 4 times in the last 7 years. We are historically at these absolute lows in terms of market volatility, and the fact people are really waiting to see how the FOMC meeting goes, whether they announce a pivot, whether they hike rates, whether they slow down on the rates, and how that's going to impact the market, because that itself is going to really determine where the price is going to head over the next couple of weeks. And we're going to talk all about that today. We'll talk about how interest rates affect the market, how inflation impacts interest rates, and how all of that actually shifts risk in the market and thus alters the price of these assets, particularly these risk assets, stocks and cryptocurrency that we actually trade and use on a daily basis. So we'll talk about that later, but let's get into our analysis. So Bitcoin, like I said, it is struggling underneath 20,500, and 20,500 is now that lower part of the major horizontal resistance which we have developed between 20,500 to 20,800. Now, before we get into any macro analysis, I do want to go ahead and point out some major horizontal zones, but just indicating this now, this is that major resistance. And we do need to get above here if we want to see any sort of continuation upwards. A daily candle above would be ideal. But let's go ahead and identify some zones on a smaller time frame. And we'll go to our 4-hour chart to do so. So I'm just going to go ahead and eliminate some of these technical indicators. Here we go. So as you can see, we have a few lines going on. We have 20,800, that black line. That black line indicating the weekly resistance slash major blockade point slash trigger that we do actually need to break above. It's a newly formed one that we do need to break above to see any sort of continuation upwards. A break above that level could potentially send us as high as about 21,800, and even potentially higher depending on what kind of momentum we have going upwards. But we do have that major resistance zone between 22,500 and 23,800, which we'll talk about later on into today's video. But moving downwards from here, guys, of course, if we fail to break above here, we do expect a continuation downwards. Losing this dotted yellow line over here, which is our trigger zone, slash losing this 20,274 level, will actually trigger that collapse down back to 19,800, potentially even back lower to 19,400 and 19,000. The reason being is every single time we have seen the price push above this level, all right, above this level meaning 20,274, okay, every single time we've seen it, once we return and break back below it, we always lose 19,800. There's not been a single time where we have not lost 19,800 coming back from above and through 20,272. Obviously, that will not continue forever. There'll be a point where that trend changes. But going off historical data over here in the last few months, we do usually see that collapse into this 19,400 level, and often even back down to 18,800 to 18,700. So that is why I'm saying that if we do see a drop over here, if we see the FOMC meeting go bad, we can potentially see this entire move upwards be fully retraced. So we are genuinely between a rock and a hard place. So we're really between this rock, which is this level up here, this major resistance, and a hard place, which is this level here, but so we fall below it, Bitcoin's going down. So a lot rests on the next 24 hours, and particularly the next 17 when FOMC comes out. It's going to be really, really interesting. So what should you do, guys, if you haven't bought in yet? The best thing to do is to be patient. Particularly if you're looking for long-term positions of Bitcoin, missing 1% or missing 0.5% for insurance on your position is not a bad risk. You do not have to worry about that. It's not awful. 1% over a grand scheme of things does not make a difference. If that 1% is, you're paying that 1% to be more confident and secure in your position, that could potentially save you 10, 20, 30% of a downturn if you didn't wait. In saying that, guys, if you did buy one we told you, which was 18,000, you are up, I don't even know how much now, you're up like 15 or so percent, maybe even higher. You're up a significant amount of percentage of here, and it's best to, 15 odd percent, it's best to just leave it, wait and see what happens, because again, there is a possibility we do pivot, there's a possibility FOMC comes out positive and we continue upwards from here. So you do not want to be getting out of our position, which was that massive profit, too soon. Let's go ahead and take a look at FOMC, since we've kind of talked about that already. So FOMC is coming in 17 hours and 20 minutes, just under 20 minutes, which is around 4 a.m. Australian time if you're watching this video today. It's around 4 a.m. Australian time. I'm not too sure what time it is in America, but 17 hours and 20 minutes from now. The expected is still 0.75. And 0.75 is around 84.1 expected, where 0.5 is around 15.9, and almost 0% is expecting 1 basis point hike. So obviously the market is anticipating 0.75. Anything below 0.75 is going to be seen as very, very bullish, okay? Anything above 0.75 is going to be seen as very, very bearish. But here's the thing. If they don't mention pivot in any scenario, that is going to be seen as bearish. The reason being is because this entire move here, this entire move we have seen upwards, did not move on the idea that we're seeing 0.75. Okay, the expected 0.75. We didn't price in 0.75 by this move. This isn't what's happening. Okay, this move is a result of the anticipated or expected pivot the Federal Reserve is going to undergo. Therefore, no matter what the interest rate is, guys, if they do not talk about pivot, if they don't pivot or don't say we are going to pivot, this move will retrace. Very important we understand that, as because this entire move upwards was triggered by that article which was released by the Wall Street Journal indicating the Federal Reserve will pivot, okay? That is why we've moved upwards. We'll talk about that later on, a little bit soon actually, about why markets move based on perceived systematic risk and why the expected pivot actually resulted in this move upwards. So let's kind of talk about that now actually while we're at it. So we'll go to a DXY. And we need to scroll upwards over here, but we've got a few charts. And I've had a few questions from people in the comments lately saying, hey, MegaWhale, have you explained, how interest rates impact the market, what happens, all that kind of stuff. We'll kind of go over that really, really quickly now. And I know we've talked about this 100 times on the channel. So if you watch this video, go ahead and skip forward to the next timestamp. Otherwise, feel free to just quickly look at it again before we move on to the next analysis. So obviously we have CPI over here. And we're not really talking about CPI today, but essentially we'll go over real quickly. CPI, or should I say PPI, so Producer Price Index, can sometimes tell us, there's a leading indicator, it can kind of tell us what CPI is, but Consumer Price Index generally tells us what inflation is. So it's a defining indicator. It defines what inflation is. So inflation has been very high lately, and there's no question about that. Everyone knows inflation has been high. It's been all over the news. It's been something that we've all experienced, we've all seen over the last few months, and there's no doubt about it. Okay, so what does a government do? They use interest rates as a tool to combat inflation, to try help bring inflation down. Okay, so Generally, when we see interest rates rise, and it could be, we're rising by 0.5 every hike, or rising 0.75, or rising, 0.25, or even 1. This adds together, and that gives us our total rate, So you have to understand, even if the Fed increases it by 0.5, that is still actually adding to the total rate. We have to understand that, okay? So they're increasing their interest rates, and the reason they do that is to try reduce inflation. Now, it has some negative effects on risk assets and the economy, because as you increase interest rates, interest on debt rises, right? You have to pay back more towards your debt obligations, and that affects companies and it affects consumers, or should we say households, in two different similar ways. Let's talk about households first. So as interest on debt rises, household available cash flow decreases. And the reason being is because households generally have a lot of short-term debt, whether it be car loans, or it be personal loans, or even long-term debt such as mortgages. And mortgages is where a lot of people have seen the effects of interest rates, particularly in Australia. I know mortgage rates have gone up around $500 a month, sometimes even higher depending on the size of your mortgage. And it's affected people's available cash flow. Now, when their available cash flow is low, they generally want to increase their available cash flow. They want to increase their buffer. So how can they increase their buffer so they don't feel like they're bankrupt, or they don't feel like they're on the edge of bankruptcy, or they can't repay their debt obligations? Well, they do two things. They reduce their spending in the economy, but more importantly, they look to either de-risk themselves in the financial markets, meaning they sell off their assets, or they do not look to be investing in assets. Why would they be looking to invest in assets when their cash flow is decreasing due to their debt obligations increasing? They wouldn't, okay? So that's one reason why asset prices have fallen. That's another reason why we're seeing a steady decrease in interest in cryptocurrency in terms of how popular it is, how much it's being spoken about, how many people are in the space, okay? The next one is the big one that actually drives asset prices down the most. That is companies. When interest on debt rises, companies' debt to service ratios massively reduce. Their future cash flows earning potential massively reduces, and they need to increase their balance sheets by selling some of these assets to make their cash flows more positive, to make their companies look more sustainable and more favorable, okay? So they generally end up selling off their assets to do that. And what that does, all of this over here actually reduces in, or results in, asset prices falling. And that is exactly what we're seeing. We've exactly seen that. Here's the thing, guys. Everyone's waiting for a pivot, and this is what's going to happen. We have to think about the reverse process. If interest rates start to fall, what happens? Interest on debt starts to fall, available household cash flow increases, more money available to spend, okay? More money available to go into assets, all right? Vice versa. When interest rates start to fall, companies become more risk on again. They're more likely to take on loans to acquire assets, which result in asset prices rising, which results in future cash flow earnings for their companies rising, which also results in share prices rising, okay? So interest rates really do control the risk asset market. It really does impact how these asset prices are priced in the market, what people are willing to pay for it based on the market risk. So here is what we need to kind of bridge into now, and this is perceived systematic risk. Looking for an honest, reliable, and accurate exchange that you can trust to trade on, go ahead and sign up to Bitget with the link down below and join myself and all of our other VIP members and other members who trade on Bitget daily. There's a whole range of benefits and features you can actually get by trading on Bitget. These include no government regulations, meaning you can sign up from anywhere in the world. There's no KYC, 0% trading fees on spot, massively reduced trading fees on futures. It's one of the lowest in the game. And most importantly, access to their protection fund in case the exchange gets hacked. You can actually get reimbursed for your funds, so you can ensure your funds are safe. Now, most importantly, if you do sign up with the link down below, that first link, you'll get access to 2 additional features. These include access to a reward center where you can get up to $4,163 in rewards, and access to the MegaWhale exclusive referral link, bonus discounts. Every other month we do bonus campaigns. We get up to 10% off your trading fees, or even you get a percentage of your trading fees refunded to your account as USDT. Essentially, you get paid to be on the exchange. That's enough, guys. We'll get back into the video. Why did the market move upwards in the last 2 weeks, even though we haven't heard anything about the interest rates, even though we haven't had any adjustments to the interest rates, even though we haven't even had the FOMC meeting. How could we move upwards? How could the asset price move upwards if the actual systematic risk hasn't changed? That is because the systematic perceived, or should I say perceived systematic risk has changed. And perceived systematic risk is basically the psychological risk of the market, what people perceive the risk to be. A systematic risk, real quickly, is interest rates, inflation, monetary and taxation policies. Factors that you cannot influence, factors that you cannot as an individual impact, that actually do provide risk or aspect of risk in your investments, okay? So if the perceived systematic risk falls, if it drops, if the perceived risk drops, what happens to asset prices? Well, they generally go up, okay? And they go up in anticipation of the actual systematic risk following the perceived systematic risk, okay? It's like a leading indicator, okay? So I've been saying for a long time, we don't actually need to see a pivot. We don't actually need to see interest rates bottom out. All we need to see is the expectation that they will, or an announcement that they will, and that will mark the bottom. Then asset prices will start to rise based on perceived systematic risk, and hopefully the data can reflect that perceived systematic risk, and then the prices will continue. And that is where we're at now. We're at a point where perceived systematic has fallen, perceived systematic risk has fallen, and we're waiting to see if the data that comes out soon will be in alignment with what is perceived to be the perceived systematic risk. If it is not, the markets will react poorly, okay? If it is, the markets will continue to react positively, okay? So that is why FOMC is so important, because if we get a poor FOMC reading, we're going to see the markets correct this entire move we've made, okay? If we see a good reading, we're going to see a continuation upwards just as strong or equally as strong as what we saw prior to this leak of the pivot, okay? So how can you position yourself? This is what I'm going to be doing. I'm going to wait for FOMC. If we come out at 0.75 or under, so under 0.75, 0.5 I think is an instant buy. Above 0.75 is an instant short, okay? 0.75, but they do talk about pivot. I think I'm going to do a low position long, and 0.75, and they don't talk about pivot. I think that's going to be a short, okay? Because I think the market moved more based on the expected pivot than the potential rate hike itself, okay? Very, very important. So I'm going to say it again. 0.5 is an instant long in my opinion. 1 is an instant short. 0.75, and they do mention pivot, is going to be a lower position long depending on how they mention it. It'll be a little bit more intricate. And 0.75 and they don't mention pivot is going to be a short in my opinion, okay? Again, this is subject to change depending on where the prices are. We'll talk about that in the channel, in the Telegram channel, so stay tuned in the Telegram channel for more information leading up to the date. But the next video, of course, tomorrow will be after the FOMC meeting. Now, it's very, very important you try not to front run the information. All right, the prices will generally move rapidly prior to the information release. Try, be patient. If you miss the entry, you miss the entry. Guess what? This volatility is not the time to be trading anyway. If you miss this entry, consider it a gamble and you just missed it. It's best to wait until after the news releases, see where the price fluctuates and stabilizes to, find its trend and then trade it. If you're a little bit risky, if you can afford to risk some, yeah, you can trade the news release. But if you don't want to take the risk, if you don't have the money to spare, then wait until the news surpasses and passes by, okay? So let's talk about the rest of the economy, guys. And this is the Dow Jones. We talked about it yesterday. We said we saw a push upwards here. We'd really like to see a clear of this level at 33,000. We didn't see it. We got rejected. We pushed back down. We've actually now retested this neckline again. Again, retesting this neckline is a good thing. We fall through this neckline. We can see a continuation downwards to this level over here. Of course, FOMC will trigger that, or it may trigger a move upwards. A lot is resting on FOMC. Again, S&P 500, we saw a rejection from this point up over here, pushing back down to this horizontal range. Again, losing this horizontal range, continuing down with very, very bearish, pushing upwards and rebouncing over here can be a good thing if FOMC is positive. Again, a lot resting on FOMC. Bond yields are looking pretty decent here. In structural wise, they're looking bearish. In terms of structure, this is a rising channel. We do expect these to drop down. If these do drop down, guys, Bitcoin, crypto stocks rise in price. Okay, if this does find support and push upwards, Bitcoin, crypto stocks drop in price. Okay, and we're seeing the same thing happening on the 2 year. We actually lost that horizontal support range. We kind of faked down below, we pushed up, we found support on it, we bounced back up again, but clearing this upper level here would be required for this to fly and continue upwards, potentially to 4.8, 4.7, which will result in crypto assets falling again. So keep an eye on that one. I think that is about it today, guys. I hope that's been an educational video. I do want to talk about the giveaway. So the giveaway we're going to be doing at 4,000 subscribers. We're very close. We're super close. I think we're like 60 or maybe even 50 subscribers away from 4,000 now. I can't quite remember. I haven't really looked, but we're very close. So here's how you enter the giveaway. Now, because we're going to change a little bit, because we had a lot of problems last time with our giveaway. We had a lot of people pretending they were the winners, sending me Telegram messages claiming to be the winner, would change their name, change everything to act like the winner, just trying to scam me essentially. So the only way to get around this is how we're going to do it. You have to leave a comment down below, okay? But to make sure everyone's got a verified personal identity that you can't edit, if you have subscribed to Bitget, you have your personal identity number, user ID. Copy and paste your user ID into the comment section below. Say, here is my entry, here's my user ID. I'm going to select a random comment with the user ID, and that is going to be a winner, okay? So to enter, sign up to Bitget with the link in the description. Once you've signed up with my referral link, you'll get your user ID number. Comment the user ID number on any video from today onwards at 4,000. We'll go through the videos. I'm going to choose a random winner, obviously user ID, and we can double check that and get evidence that that person is the winner and they will win. I'm going to do maybe 3 winners. I'm going to give away, I haven't decided whether it's going to be $400 or $4,000 yet, but so it is our 4,000 giveaway winner, but I can't just keep going up and lost 1,000 by the time I get to 10,000, we give me $100,000 away or whatever it is. So maybe 400 split between 3 people, or 4,000 split between 3 people, but more information will come. So to enter the giveaway, sign up with the Bitget link down below. It should be the first link in the pinned comments. Once you've made an account, copy and paste your user ID number and paste it in the comment section down below. And that will be your entry into the draw. Now, to make sure we keep it nice and fair, everyone who does sign up to Bitget with the link down below, you do need to make a trade. So once you've made an active trade, that will trigger the entry and confirm your entry into position. I'm going to choose a random person on my Bitget referral link list who have actually made an active trade, and that person will be the winner. Okay, I hope that today's video has been helpful, and stay tuned to the Telegram channel for some more updates. If you are going to be trading FOMC, if you're going to be around for FOMC, you do want to be in the Telegram channel, because we're going to post all our live updates in the Telegram channel. That being said, we'll catch you tomorrow for the next video to take a look at how the market's reacted, see what's happened, and we'll discuss it tomorrow. That being said, guys, I'll see you tomorrow. Cheers.